Hey, welcome back to another episode of John's Cryptotherapy. Today, we're going to look into price and, there's future moves that we're going to dictate and exactly see how it's going to pan out. This is very important to understand the key fundamentals of trading, risk to reward. If you're not managing your risk and your rewards carefully, guys, you are absolutely going to lose a ton of money. It's not about who gets the best trade. It's about how much trades you could take with proficient skills and, great analysis behind them. Okay. So right here, we have the head and shoulders, and we had a breakout of structure, symmetrical triangle, breakout of structure, and the channel formation, breakout of structure. We identified that, the Disney news did not break the channel. So we thought this channel was going to be strong, which absolutely it is. We wanted to see it peel off from the symmetrical triangle, go up in price, and we wanted to see a test of this beautiful channel or this head and shoulders neckline. Reasons why we wanted to see it: we had a great formation. It was a beautiful pattern indeed, and we could have seen price going back down a little bit more. Once the patterns were completed, then we wanted to buy the market and see price go back up. The reasons why this did not happen: the harmonic pattern itself was completed, but into a sense of great level. We wanted to look for that beautiful trade. That was a great risk to reward trade. It was 1 to 5. And each time you take that trade, if you try to take it 10 times off of key levels, you'll at least win 8% of the time. So you got to be focused in your routine and still continue with your trade. So in this topic, we see a lot of great momentum. See, great momentum is a good thing and also a bad thing. When we have a lot of momentum like this without key levels of pulling back to, yes, we had a minor pullback right there, but if we do not have key levels of major pullbacks into bigger zones, it is very cautious that you need to be, because there is a chance that the price can reverse. There is a lot of people saying, hey, John, is it possible to see price 0.0070? I don't think those levels are absolutely possible now, because if this is the 1, 2, 3, 4 wave, remember the fourth wave cannot get lower and touch the first wave. So if that's the case, the best possibility we can see, it's a little bit above the first wave. This is the lowest that we can absolutely see the price, 0.0073. And if it does go lower, we need to draw all these patterns all over again, because it must be incorrect due to the fact that 4 actually touched 1. If 4 does touch 1, we just have to readapt to the situation and make a different pattern. So this is what I'm trying to do to play it off really, really well. So if we know that this is the fourth, what is typically going to happen is this wave right here is the fourth, this is the third. So once it goes to the third, we're going to find resistance, not because of anything else, but strictly price action. We had a beautiful demand zone of sells and buys, but typically sells. So if that's the case, we do want to see price going back down just for a little before price finds support and goes back up. And in order for us to see that, we need to make sure we have the right formation. So in this key level, it is important to look for the right candlestick action. Okay, there is a lot of people that are just getting into the markets because they see one red candle and they think that that is the price action. No, absolutely not. We want to see wick rejections, guys. We want to see a lot of volume in the direction of the opposite of the trend. So if we're looking for a volume candle, and we see the volume candle actually touch right here and find resistance and going back down, that's exactly when we would try to sell, because the volume is with us. If the volume does close and it follows up with a bullish candle, that is typically a short reversal, and then the pump of the price is going to break these zones and we're going to get faked out. So because understanding these key fundamentals, and we were looking for reversals here, yes, the reversals were to just buy the market for a cheaper price. But it did not happen because we did have a lot of noise. If you guys look at this very carefully, look at all of this area. This was just a lot of noise. But now we're getting away from the noise and we're coming to key levels. Key levels as in this is the only wick you'll see in this whole chart that stands out, because this was previously the highest high. So if you guys notice, now we're coming into a great level of demand of support and resistance, typically resistance. So what I'm typically going to do is going to be very simple. I want to see price go a little bit up, see a rejection candle, see how it plays out. Once it plays out, I'm looking for 2 levels to buy back in. So these are going to be my level, and these are keys. So if you guys do want to write this down, it's totally up to you. So this level right here is going to be my first demand zone of 0.0077. I can see price going up here and then coming back down and finding that key level of support. Support can absolutely be done right there. Then we can see the price eventually going up. So please make sure to put some levels right there. Then we can see price going up. And also last but not least, this is the other most important thing. We can see here in this level right here, we do have a wick rejection as well. And we see that it does have some great fundamentals and principles. So because we do have some minor pullbacks and great levels, indeed, we could see this level being hit. So if you're looking at 0.0070, I don't think that's in the realm anymore. Right now, what is more realistic is 0.0073. So please make sure to put that principle in and make sure it's in those levels, okay? So we do have a great chance that price can absolutely go up. For the fifth wave, I'm predicting 0.0093. Reasons why, when you look left of structure and you zoom all the way to the end of the chart, you can see major levels of wick rejections. These wick rejections are not just random wick rejections. These are great zones. So because we were looking for great zones, we need to identify that, future price can absolutely reverse there. So what I could truly see happening is these two major things. We can have that pullback that we were looking for and that third wave going towards the fourth. But also we're going to get a beautiful pullback right here on the fifth wave, right before the penny mark. So psychologically, this makes sense because a lot of people are selling at the penny mark or before the penny mark. And this 0.009394 is so much before the penny mark, giving you a heads up before the dump actually happens. So if you are a trader, remember, this is not financial advice. This is just my advice that makes sense when it comes to trading. It's something that I would personally do. So if you're taking these levels, remember, we're looking for pullbacks. So right now we're going to look for the candle formation, pullback into key levels. So this is going to be my first buy zone, second buy zone. And if price does go below number one, the move of the swing of the first wave, then we have to correct this whole wave again because it has to make sense. Okay. So 4 cannot go into level 1. So please make sure that it does fall above structure. Remember to put some limits, orders, and try to buy the market because number 5, the fifth wave, is going to be the epic dump. And also, guys, psychologically, we were looking for a great pullback. It did not happen, and that's totally fine. That is showing me that, a lot of people are getting into the projects. They're seeing the future vision, but a lot of whales behind the scenes are really waiting for the time to dump the coin because they need to get more profits. And this is just a psychological thing. So right now, a lot of buyers are just getting in. That's totally fine. Everyone is going to FOMO. And remember, when people are greedy, you need to be smart. When people are fearful, that's when you jump in. Right now, the greed indicator for this is ridiculous. A lot of people are just jumping in because they truly do believe in the project, but absolutely, you got to be reasonable and see that, we are going to get a key pullback. So right now, those are the strategies that we're going to do. If price does decide to break above and there was a great news or great fundamentals that did not give us a pullback, eventually we will see that pullback. So don't be scared. If price just shoots up and a lot of people get scared, don't worry, we will look for a pullback. Once we get that pullback, we're still getting it at the same level with more confirmation. So a lot of traders do miss out. They do believe that, when price breaks up, that it's time that we go in. No, it's not. It's time that you realize if price does go up, we need to be smart investors and wait for price to come back in, right? We don't want to buy it at the top. So pretend the price went up, we bought round here and the price reversed. You want to see key structures being hit before you decide that this is the final move to the upside. So guys, please make sure. So these are going to be my key levels. I'm looking for wave 3 right now to be completed around this section. If wave 3 could be completed, even if it goes a little bit higher, that's totally fine because let's look left of structure. Let's see if there's anything that's showing me that it can absolutely go a little bit above. So you know what? There is a structure showing me that it could go above. So let me draw this out for you guys. So let's go right here in the horizontal right here. Reasons why I wanted to put this level right here. We do have some wicks right there, and then we have some wicks right here. So please make sure to understand this key principle. Okay, guys, this is a key principle. So we have this move that we identify that wave 3 can land. Okay, so we identified that. But also we do have another level right here saying it could go a little bit higher. So please be patient. Look for the right candlestick. So what I'm going to do is put it in the middle. Look for a close of structure there. Look for some candlestick formations that make sense. And that is where the key level for my reversal zone of my reversal trade is going to happen. So let's plan this out the right way. Let's see exactly what is going to happen here. And remember, we want to see wick rejection. So I want to show you guys what I'm talking about. So please make sure to focus. Okay, so let's look at this right here. So if price, let's just say it comes up here. This is what I want to see. These are the candle formations that I want to see. First off, I want this to be a bullish candle. I need this to be a volume candle showing me that price is actually going really strong. Once it goes really strong, we want to see a doji, a hanging man, whatever you guys want to call it, whatever formations that you want to see. Of course, you want to see some wicks on top and on the bottom to show me indecision. Indecision is a great identification of a reversal of, you know what, price going. But this is where a lot of students do get confused. We don't just want to see one. We want to see more. So I would love to see another candle right here followed up. And guess what? This candle must have some wick rejections. The more wick rejections we do see on top of these key levels are giving me more chances that price will go down. Also, after that, I want to see a huge candle closing below structure. So when I say below structure, let's look at it this way, okay? So if we knew that this candle right here was the last structure being brought in with the pressure to the upside, I want to make sure the previous bearish candle actually closes below structure. So when I say below, I need to make sure it is below this low and it actually closes. If the candle goes down like this and it closes right above, I'm not going to get into an enter zone. Reasons why: this can still fool me and give me price action to the upside. So this is the most important thing. If you are a hesitant trader, remember, I want to take this out so you guys can see. Let me just do this so we can get the bigger picture and I'll show you what I'm talking about. So let's do this. Okay, if price goes down, all right, and then let's just say it breaks the previous low, I would love to see that, okay? So I would love the previous low of this candle to be broken with a bullish candle. Then guess what? Price is typically going to come back up. So when it comes back up, what do I want to see at this key level? Of course, I want to see a wick rejection. If I can see that, that is when I will enter. So look at this and how cool this is. Price comes up. We have a beautiful doji wick rejection right here. Then we followed with a bearish candle. Did not close below structure. Once it does close below structure and we have confirmation, we can look for a trade signal there. If you miss this trade, do not get into the trade. What you would do then is wait for a pullback in a key level. So key level is going to be right here. This is where we identify a key level. Once we have a key level, will we get into a trade right here? No, absolutely not. What you want to do now is put a line at the bottom. And with this line in the bottom, what you want to see now is another candle breaking below structure. Once we have that confirmation of another bearish move, that's when we fully enter this move. Reasons why we're making lower lows and lower highs. Because we're making lower lows and lower highs, we're identifying the nature of the move. So this is what I want to see. I want price to go down. Then guess what? I want price to come back up. Then guess what? I want price to go back down. This is the truth about trading, because you want to get into this trade. There's different ways of understanding when to get into the trade. You do not want to get into the trade when the trade is already running. That is not the way to do it. A lot of people FOMO in. Once they FOMO in, guess what happens? The price reverses and goes back up. So you do not want to do that. What you want to do is identify a key structure. So for this incident, we're going to talk about this trend line. So when would you take the trade? Every single time it comes back to the trend line. Whenever it gives me a great chance for the price to come back close to the trend line, that's when I'm going to look to trade the trend line. Once it breaks the trend line, we're going to look for a reversal. So a reversal is going to look like this. We're going to see price, going back down. And then, it can break the top. Will we get into a trade here? Absolutely not. what we could do is wait for a pullback in a key level. See how this one aims to be in a key level? If this is in a key level, this is going to give me alert, as in I'm ready for the market. Does that mean I'm going to enter this trade? No, absolutely not, because I'm not a real aggressive trader. I'm more of a calm and prestigious trader in a sense that I like the price to give me the entries. I don't rush the trade. That's the key, guys. Okay. So then I want to see price break structure. Then now I'm already interested. So what I want to see is price come back down, respect key levels. Once it respects key levels, I'm all in and I'm going to double my profits. That's how you would do it. Okay. And also it is important to trade with stop loss. So this is what a lot of students do fail to do. If you are looking at stops, you do not put your stop loss there because the reversals will take you out. What you want to do is put it at the bottom of structure or the lowest low. Once you do that, you want to measure your take profits and make sure it is still 2 to 1. So then you would just go all the way up and do that. A lot of people ask me as well, would you do 2 to 1 or would you find the left structure of support and resistance? What you want to do is look left of where your take profit is. Make sure there's structure so it makes sense that the profits can go up there. That's the final last key, okay? Well, hopefully you guys do enjoy this. Make sure to write down all those key notes because these notes will absolutely make you a great trader. This is just a little appreciation, a little token of what my students are absolutely going to learn. I'm expecting my students to produce millions of dollars throughout the next couple of years. So I'm super excited. I want to see my students grow and have the lifestyle they truly deserve, okay? If you guys do want to learn how to trade, make sure to follow my channel, understand these price actions, and see how it exactly falls into play, okay? Other than that, thank you so much for watching. I appreciate every single one of you guys. If you guys could like this video, subscribe, and share this video, I would truly appreciate that. For more content, I'm more than welcome to do that. Motivated to come onto the screen and give you guys more of these amazing charts. But, enjoy your night, enjoy your morning, take it easy, and John out. Peace!